Good morning all, hope you're doing well. For a sentiment overview for the 26th of October 2022, Wednesday, we've got Bank of Canada, we've got the US goods, and we've got some home sales as well from the United States. So that's worth noting. I think probably avoid the CAD because we've got the interest rate decision today, and the retail guys went really long on dollar CAD, and you can see what happened on price action on the dollar CAD. It really did fall. Right, so the risk calculation is that we're risk on, and the big picture, and at the 24-hour change, the VIX is below 30, so that's an important detail. But there is one little caveat: is that the yields fell, but the 3-month rose, and that's not really an ideal situation. We'd want the near term to come down because that tells us fear and worry in the next 3 months. So that's the caveat there, is that ideally we'd want that lower, and that doesn't really necessarily agree with this so much. Retail guys are probably going to be in the case of being trapped. VIX has been crushed, but ideally we'd want the 3-month down a little bit. And obviously this is subject to change. This could well be dumped by New York easily. So that's like the little caveat there. So ideally that fell with everything else, and that would be a nice risk on indication, and that would match our risk calculation. There's the 3-month that pumped. We're above 4%, which is a little bit concerning. So we've got the inversion of the 6-month and the 2-year. See, that's given better yield than the 2-year. In fact, the next 6 months is better than 2-year, 5-year, 10-year, and the 30 years. So lots of uncertainty and fear and worry in the next 6 months. So we'd want these to come down. Okay, so this is risk off from a yield curve perspective. That's wrong, but I can show you that. That's a wrong screenshot. We want to be looking at dashboard, and we'll go to Wednesday. So you remember, you can just use this dashboard. You can see how things have developed over time. So there's Monday's data, Tuesday, and Wednesday. So this is how we are now. See, they shorted the CAC 40, and they've gone long on UJ. All right, so note what's happening with price on UJ. Oil, they've also shorted, making it a buy. So that needs to go in place of this, but that's fine. I can do that afterwards. Yeah, that's fine. So the dollar is potentially, this could be like the bottom on the dollar crosses, technically, but we need a risk on, and we need those yields to stop pumping. And they did for most part, apart from the 3-month. So that rose, but the others fell. So ideally, we'd want that to also fall as well. And then it could be the bottom. So really, we could argue we really overdid it as well. Like pound USD, we hit an historic low. Didn't really necessarily warrant that big move. Kiwi USD is down a lot on the year, so maybe a little bit of profit taken there. Dollar yen's down. Interestingly, Kiwi USD is worse performing than the yen versus the dollar. So there's all this like upcry and all this anguish coming from the Bank of Japan. What about the Bank of New Zealand? You know, they should be in uproar because of the performance of the Kiwi versus the dollar. So it's interesting, little perspective there. Admittedly, we have come off the highs a lot on dollar yen, so that was a lot worse. A lot worse. I think it was 29%, and that was like too much. So dollar CAD is the laggard, and Aussie USD is the leader. So that's of note. So Aussie strength, and you've got some CAD strength there as well because of the dollar CAD. Ad trade of the day might be good. I think it should be fine. Would want to be careful. I won't be taking it today because I'm going to be focusing on S&P. I think might look to trade the S&P today. I'm going to be using the crossover strat on FXCM. So I was going to do a quick 2-minute video just to cover the indices in the private feed. So I might not take the trade of the day. I might, I'm not sure, but I'll probably be looking at the indices because I think they're looking for a little slight reversal in order to pump at the earnings later, because we've got Google and Microsoft later. So potential, I might take it. I'm not sure, but I probably will be trading the S&P because I think it's going to be a good buy op, because things are looking quite positive for risk. So we might want to just retrace a little bit lower, get to some support and a nice bounce. So I'm going to be looking to do that. Membership tier. So there's the Bulletin tier if you want to join and get the trade a day. You also get a ton of analysis as well. You get all the Forex stuff, but you don't get indices, you don't get commodities, and you don't get any government bond yield analysis. But you do get all of that stuff in the basic content. But in the Bulletin tier, you get the Bulletin, obviously, this video, the document, and FX. So if you want to look at any FX pair, there's lots of analysis for your FX pair in Discord. And then there's a subscription here if you wanted to join us. If you've got an FX, there's a size sub. There's a discount for you guys if you wanted to join us at a discount, and that's everything, including the spreadsheet and Discord. So there's S&P. This is what I was thinking. We could be retracing a little bit. Maybe we want to get to some support, and then for a bounce. Because if you remember, things can't keep going up. They've got a zigzag, so we probably might be just retracing a little bit, a little zag in order to zig, if you know what I mean. So this would be fine. However, there is something I do need to say on the S&P is that they've gone long on the at the static nature. So this is what I'm thinking later. I'm going to wait for this to dip down and to go into buy, then I will buy. But currently, you wouldn't want to be buying as they're going long. And when I saw this, I went, oh no, actually audibly out loud to myself. When I saw that, I was like, oh my God, they've actually bought. And that was 10 candles ago. They went long. They bought up here. Okay, so 3,850 they went long, right? So I'm going to wait for this to tick down, and ideally we get a cross of the MA and the SSI, and then I'm going to buy. But currently it's not such a good idea to buy if they're buying, because they're normally wrong, and they tend to buy extremes and then they sell. They sell at bottoms and then they buy at the tops. Right? US 30 could be making a sell, but it'd be a risky sell because at the high level it's a buy, and you could also argue they've trapped the herd as well in this move. That's already, the trap's been placed, so it doesn't need to fall because it's already ensnared that dumb money there. Okay, so that's like the logic. It doesn't have to fall because they're already trapped. These guys aren't trapped; they're trying to buy, and that's not good. So they're probably going to get punished on the S&P. So a little bit of patience with that. And I might even enter in the afternoon. I've got lots of things I've got to do today. So I might come back 12 o'clock, 1 o'clock, and have a look then. DAX, where did they? Yeah, they got trapped here, right? So, we flipped to buy here. So it doesn't need to fall because they're already trapped. That's where they got caught here, right? So it doesn't need to fall. However, if they go long, we're probably going to fall a little bit. And you note this little horrible chip chop there of the sentiment. They went long here and they got punished. 3 candles, 3 hourly candles, pretty bearish activity, and then they flipped bias and then they sold, so I'll become. Oh, and also another thing about the US 30 was the reaction as well of them selling it and that enormous spike as well on the US 30. Gold, well, they sold it. Now the thing is with gold, look what happens when they sell it. Right, they went long, fell, they sold, we went up, went long, they fell, it fell, they shorted it, we come up, and they sold it, we come up, and they sold it, we come up. So what I'm going to be doing now is using squares. Now that will tell us the candles that were formed in order to trap, to ensnare, and to give fake price action for the retail guys. So I think squares are better because they incorporate time, which is your horizontal, and price action, which is your vertical. So squares probably better than circles. So I'm going to be using squares from now on. Circles for the crossovers, squares for the price action that trapped the herd. So we call them trap candles. Okay, so that's a new concept. So squares from now on, I think, looks better. And especially the time component as well. Hopefully you understand that. that the horizontal is the time. So it takes time in order for the trap to be placed. It doesn't happen straight away. Lots of movement and lots of stops have been triggered as well. AU, gold, dollar Swiss and dollar CAD were all probed in the making of this bulletin, and it took an hour to do. AJ is now undecided. It was undecided, and the flopping back and forth, and it's undecided. And I think we're potentially going to come up to the stop loss cluster here. Note that EU is a buy, and they really did sell it as well the last 24 hours. They also shorted the pound USD. They also shorted the Kiwi. They went long on dollar CAD, and that's what I said at the top of the video. They went quite long. Look at price action on the dollar CAD. Down we come. Largest stop loss cluster is GJ, and so that's probably a likely candidate just to take stops and to really punish those guys, because why not? They can. So take their pocket money, and down we can come potentially. So we're seeing that happen all week. AU was a prime candidate. Stops below, stops above, rinsed. So it's probably going to happen on the pound yen, and that's also going to have changed as well because we took that out. Well, we're going to in the process of taking that out. And failure rates, the pound's got a 0 score, so we should see reversals on pound. Swiss has got a terrible score, and so we've got a low score overall, and that's not really normal because it tells us the little guys are getting paid as a majority. So that's not right. It should be above 50%. If it's below 50%, just maybe stay away and wait for that to get a bit higher. I wouldn't enter. This is why one of the reasons I'm not going to do the trade of the day at the moment is because of this low score. Yeah, so it's just a bit of a gamble. You'd want it to get a bit higher, then you know the trap's in. So pound's got a 0 score. All right, so don't trade the pound at the moment. Wait for a reversal. Okay. See, they've gone long on the pound. 0.83. Okay. We had CAD Swiss yesterday, but we scratched it with a 7 pip gain. It didn't really do anything at all. Actually, it was a short. Yeah, that's wrong. Let me change that. Mode editing. It was a short. And yeah, it didn't really do much at all. And so we just scratched it. Because we got the Bank of Canada today. A bit of a gamble, to be honest with you. But today's trade of the day could be fine. It could be fine. Just keep an eye on it. Technical checks, things are extreme, but on the other way. EU, GU were strong sell. I think they were strong sell Monday, right? So they really switched in 72 hours. Dollar yen still strong buy, neutral, and buy and sell and things. So they're of note. We probably are going to get that stop loss cluster above for EU. And economic calendar, we had the inflation, the CPI, and quite low inflation actually, compared to UK anyway. It was worse than expected, but compared to the rest of the world, that's not actually that bad. And we've got interest rate decision, and you've got the press conference, and we've got the home sales, and we've got the goods trade balance as well. So keep calm, always trade safely. Run a little bit late, so I'm going to do a quick 3-minute video into Discord for the private feed. I think we can see what's happening with the indices. So I wish you a good day, and I'll speak to you soon.